Go right now to Aaron Gibbs with a Wall Street look at all of this. You know, it's interesting, and I never like to obsess over tick-by-tick movements in the markets. But, you know, we were down about 142 points. We've since almost doubled that on the downside. The only link, of course, of these reports of fighting escalating in Kyiv amidst these peace talks. I guess it's a reminder, if we needed it, Aaron, that Ukraine is calling the shots, no pun intended there, for the markets. The better things look better for stocks, worse things look worse for stocks. That still seems to be the case.
Still seems to be the case. What we have been seeing since the Thursday low is that growth stocks have really been leading. So they were the stocks that are already the most beaten up. We're still seeing some hesitancy in your value stocks, so your consumer staples, your financials, the kind of stocks that we were already worried about when it came to in terms of inflation. And so it is a bit of reversal. It's not across the board, but certainly definitely a better day. You've got some defense stocks that are up a bit, and energy is really the leader for the past 3 days. It's up almost 2% today, so that's really holding the market up as well.
You know, and oil is very pricey, you know, around $95 a barrel. That's double what it was, a little more than what, about 5 weeks ago. Still, those who feared that it would run up and stay up over $100 a barrel, that has not happened. Natural gas prices, of course, vital to Europe, a lot higher there than in this country, and the futures trading, I get that. But how do you explain that at least in those markets where you would see a running, it's more like a walk? How do you interpret it?
I think, you know, we knew that Thursday there were a lot of signs that was sort of your extreme capitulation day. We might have a bit of a walk, let's say, going forward until there's really more clarity. The markets hate uncertainty, so those are the days where we had those massive big down days. Now that we're more in a wait and see, the markets are doing much the more similar sort of thing. They're waiting and seeing, and you also see the markets going back to thinking about the things that we were concerned before the Ukraine happened, like inflation. So a lot of moving parts across the board, but overall, energy really looks to be the one big winner. Continue to have its run. It was already up 23% year to date, even before the Ukraine. So this is just continuing that push further ahead.
All right, Aaron, thank you very